Javier here with your favorite weekly podcast on investing, the Geopolitical Investors Podcast. I am your host, Javier Novoa, and you better watch this show every week, guys. If you want to make money in the markets, you better watch this show every week because we give you a breakdown of what happened in the markets. I give you an independent and wide-ranging view of what I think is happening and what I predict is going to happen. Of course, there is no prediction, and we're going to talk about that. And if you read Austrian economics, if you read Ludwig von Mises, you will realize that prediction is not possible, yet we do it anyway. And the reason we try to do it, the reason we predict, is simply so that we can drive our actions in the present. But, ironically, the present then feeds into the so-called future, and as Peter Drucker said, the best way to predict the future is to create it. If you look at George Soros' theory of reflexivity, I think that is the best explanation for what happens. But we cannot predict, and so therefore I always say I'm not an investment advisor. I would never pretend to be. All I can do is tell you what I think and what I'm doing. So it was an interesting week last week, guys. I think people were selling off both to sort of unwind and take profits from the Trump bet, as well as people are getting ready for taxes. Yes, at this early time, people are getting ready to pay taxes next year, and they will need to sell off some shares of their stocks to do that. I think that partially explains why a lot of stocks were down. Now, many disappointed in earnings. There were a lot of stocks, including one that we're going to talk about, an energy stock, that although they have great projections for the future, they sort of did miss earnings, and therefore they were down. On Monday, markets started the week mixed, with investors digesting last week's rally driven by election optimism. Technology and consumer discretionary sectors showed strength. However, caution lingered as geopolitical risks, which is the specialty of this show, and inflation data awaited later in the week. On Tuesday, November 12th, major indices dipped as weaker than expected housing data weighed on sentiment. Of course, weak housing data, forget about a house, guys. I think Peter Schiff and others 15 years ago were correct when they said it's not an intelligent investment to buy a house. I think it does not follow the rules of other markets because it is an artificially inflated market. And now, forget it, even people earning six figures can't afford a house. There has to be another way. And that's what we're sort of going to talk about with the alternative ways of investing. We're going to talk about Raoul Pal, who's a person I admire. I agree with many things that he says. I disagree with some things that he says, but we'll discuss that in due course. Retail earnings reports from Walmart and other consumer-focused companies provided some support. So, and it's human nature, guys. Even though people are in debt, even though inflation is still high, real inflation, not the government fudge numbers, and even though the outlook is sort of bleak, this was before we knew that Trump was going to win these numbers. People still said, screw it, I'm going to spend money and I'm going to enjoy my life. I don't think people even care about debt so much anymore. People are going to enjoy their lives. There's a case to be made for that. While it's here, we're going to enjoy it. Now, when is economic law going to come in and put a stop to that? It has to happen eventually. We can't predict when, but we need to be ready for that when and if that happens. Of course, we said it's a lot about emotion. The economy runs mainly on sentiment, expectations, and expectations that the other side will comply with their obligations, which is why this can be seen from a certain angle as dangerous, this YOLO spending, but people are doing it. People will continue to do it as long as they're able to do it. Oil prices started declining on projections of a 2025 surplus. And we're going to talk about oil because not only will oil decline on the surplus, the prices of oil are also going to decline on possible peace in the Middle East, possible peace between Russia and Ukraine. And I think it's highly likely I think it's highly likely in this new Trump administration that we're seeing being built. More on that a little bit later in the show. We're going to analyze some of Trump's picks and what I think they may mean. Take it for what it's worth. Wednesday, November 13th, inflation data aligned with expectations, keeping the Federal Reserve's interest rate stance in focus. Chair Powell signaled no rush to lower rates again, leading to a mild pullback in equity markets. Markets like low interest rates. Gold and other safe haven assets saw continued decline. I think that gold declined one day last week, a record decline. I think it's just temporary. I think it's a buying opportunity for precious metals. Of course, gold, the evergreen precious metal, over time has always gone up. It's been the case for the last 5,000 years. It could be different this time. Thursday, November 14th, stocks were volatile with jobless claims suggesting slight labor market softness. Tech remained a bright spot, but health tech and industrials lagged. Bitcoin rallied further, continuing its strong performance from the previous week. Bitcoin is going to $100,000 before the end of the year, before 2025. That's my prediction. Take it for what it's worth. I believe that's the case. And it's going to $1 million in the next 5 years. It is the currency of the future. More and more are adopting it. And even with Trump's announcement that he is going to get rid of the current chair of the SEC, who is really anti-Bitcoin, and he will put someone there who is pro-crypto, for sure. You can take that to the bank. Friday, November 15th, markets ended the week on a subdued note, with consumer sentiment data showing resilience despite higher borrowing costs. I told you they don't care. The S&P 500 closed down over 2% for the week, with energy and materials sector leading losses. Bitcoin's rally offset some broader risk aversion, but gold and oil remained in the red. This performance reflects investors' recalibration of expectations amid macroeconomic data and sector-specific trends. So, ladies and gentlemen, I think there are a lot of buying opportunities in the markets now. Markets went down. Of course, it seems like they're back to a somewhat rational level. Meet Kevin was talking about the fact on Friday that the NASDAQ 100 has been down 5 days in a row for the first time this year. That's some kind of indicator. And he says if it goes down on Monday for 6 days in a row, that will be the indicator of some looming recessionary process. Now, I've always asked myself and others about technical analysis and technical factors. Does it have to be that way? Why does it have to be that way? It certainly doesn't have to be that way. That's why I take technical analysis with a grain of salt. You won't see me using a lot of technical indicators in these videos because I'm not a technical guy, although I may use them for an entree into a stock or an exit point. I think those things only exist because other people believe they exist. You see me? Because if you have a group of traders that are looking at technical indicators, that's why they work. But I don't see that there's a magic potion in the fact that the NASDAQ's been down for 6 days in a row, therefore such and such must follow. We must always be very careful in positing a cause and effect relationship in economic matters, and indeed in any human behavior matters, because at the end of the day, what matters is the volition of the actual humans involved. And this ties into the AI predictions of Raoul Paul. This ties into technical analysis. This ties into the predictions of anybody, because I would recommend everybody, if you're an investor, you must read Ludwig von Mises' Human Action. It is a primer in economics. Even if you study traditional economics, you need to have the Austrian view, because in the Austrian view of economics, the whole edifice of economic science is built upon a science that Ludwig von Mises calls praxeology. It is the logical science of action. Note, it's not psychology, so we're not talking about economic behaviorism or any of these schools, which are useful in their own right. We're not talking about Minsky or any of these people. What we're talking about is the simple logical deduction of propositions stemming from the main propositions. Humans act. The proposition that humans act means that there are certain laws that are derived from that have to happen in any sort of action, in any sort of exchange. So I was listening to Raoul Paul, who's a pundit and YouTuber and social media influencer, investor, wealthy investor in his own right. And again, I love a lot of his material. I consume a lot of his material. I agree with a lot of his stances. I think that the best way to get rich very quickly now, within a few years period, is going to be these new crypto. Indeed, it's going to be these new meme coins. He also talks a lot about macro investing, and that does tie in a lot with geopolitical investing. Geopolitical investing is basically macro investing, simply focused on geopolitical factors, demographics, the way countries react and behave with one another, as well as what governments are doing. And so we do have a lot of convergence. Where I disagree with Raoul Paul is he has subscribed to this religion of AI. And his idea is that AI, within the next, say, 5 to 10 years, is going to surpass the IQ of the average human by a multiple of 6, 7, 8, 9, or 10. So it's going to have like a 1,000 IQ, he says. And therefore, knowledge is going to be free. Knowledge is no longer going to be a scarce commodity. And therefore, he says that there's going to be no way to understand rationally markets anymore. He says you have 6 years. I like that, by the way, because I want to get rich within 4 to 5 years. He says we have 6 years to get rich, get economically situated. He calls it un-F your life. Because after that, there's going to be no rational decision making. And I know that Raoul Paul has studied a bit of Austrian economics because he debated Peter Schiff, and he demonstrated some knowledge in that regard. He knows Austrian theory on currency and money because he used the argument beautifully to advance Bitcoin, which I agreed with, by the way. I think Bitcoin is the new gold, has a lot of aspects of gold without many of the drawbacks. I also still believe in gold. He is saying that we're not going to be able to rationally analyze economics anymore, therefore no one's going to be able to make money. But I want to ask Raoul Paul and remind him and remind those who accept his thesis. Anytime humans act, the laws of economics do come to the fore. For example, economics assumes that we do not know the future, that the future is unknown. The only time that action is possible is in the present. So there's a real present, and then there's a future. Now, if the whole future is known, then that would be true, that there would be no space for these ideas. But if the future is known, then the future is the present. And if it is all known, then no action is possible, because all action is carried out in the present to affect a future outcome. So just the fact of there being a present time and a future time would mean that economic laws will apply, there would be exchange, there would be economic cause and effect, there would be a market, and there will be market prices. Now, how different would this be? Let us assume that we make contact with a UFO civilization, and there are now aliens in the mix, and aliens are owners of all of the corporations and so on and so forth. Economic law would still apply, we just have to factor in these new exogenous factors that are in the mix. But Raoul Paul makes it seem like no rational behavior would be possible. Well, if no rational behavior were possible, we would no longer be living beings. Any living being, by definition, any living rational being, must act according to that rationality. So it has to be that there would still be markets and market prices. So I do not believe in the deification of this AI and the singularity that he's talking about. No, I think the market will continue on well after the 6 years that Raoul Paul postulates. Raoul Paul says knowledge is no longer going to be scarce. Knowledge is going to be free and ever present. And our current economic models depend upon the fact that knowledge is scarce, that is not evenly distributed. And this is a whole can of worms that I could go into unceasingly. And of course, we don't have the time on this show to do that, so I'm going to try to address it just very briefly. But first of all, let's say not only knowledge was non-scarce and abundant, Let's say that every single resource was non-scarce. And of course, again, Ludwig von Mises dealt with this proposition not this year, but in the 1940s. When he was writing Human Action, he talked about the fact. Let us assume that we lived in the land of cocaine, and the land of cocaine was this mythical land where we were in a paradise, and that everything was just abundantly available. Let's say you didn't even have to get up to eat. Someone would just come feed you your food, or let's say a robot will just come feed you your food. You can have Michelin star meals made by your AI robot and so on and so forth. There would still be scarcity. Why? Because there's still a limit to the number of things that you could do at one given segment of time. So for example, just based on the law of contradiction, you cannot ice skate and swim at the same time, because to swim would assume that you had water, and to ice skate would assume that you had ice which was frozen. So those are almost logical contradictions. You can't do that at the same time. You'd have to ice skate, let's say, for 30 seconds, then go for a dip for 30 seconds. So there's scarcity right there. You still have to decide what you're going to do in any allotment of time. And people have different desires. Some people want to do ice skate in that segment of time. Some people would want to swim in that segment of time. So they're going to have to make an exchange. They're going to have to give up one thing to do another thing. This is Austrian Economics 101. They're going to have a preference, and they're going to then have to choose based upon the number of factors that are there. I hope you understand me just a little bit. So even assuming that you have no scarcity, there will still be human action. Therefore, all of the laws of economics will apply. Therefore, there will still be markets. There will still be rational analysis. There will still be rational action. So let's just take Raoul Paul's assumption that knowledge will not be scarce. And I don't believe that anyway. Because, for example, when I get on ChatGPT a lot, and when I use it, it is often incorrect. It is often empirically incorrect. It often gives me broken links. Of course, that's going to improve and so on. But the first mistake in saying that knowledge is not scarce is analogous to the water and diamonds paradox in the economic community during the 19th century. They said, why is water cheaper than diamonds when water is more necessary than diamonds? And the mistake is assuming that these are homogeneous entities without division. So knowledge is not a homogeneous entity. There are portions of knowledge, and there are grades of knowledge. For example, one piece of knowledge might not be as high quality as another piece of knowledge. For example, let's say there's a piece of knowledge that's only probable. There's another piece of knowledge that is apodictically certain. Now, we could say that only what is apodictically certain is knowledge, but that's getting pedantic. There are pieces of knowledge. So, are we going to say that every single piece of knowledge is, first of all, going to be distributed in the same way at the same time? There's no way that it's going to be evenly distributed. And as we talked about in another podcast, even if there was a perfect piece of knowledge distributed to everyone, every person who received that piece of knowledge would act differently. Therefore, it's not a commodity. In fact, I would dare say that, let's say the sun is in the sky is a piece of knowledge. If I receive that proposition and Raoul Paul receives that proposition, those are two different pieces of knowledge. Why? Because we're both going to react differently to those pieces of knowledge. So we're going to talk about what I did last week, the buys and positions that I'm setting up for this coming week. And then I'm going to talk about just some of my still developing off-the-wall theses that I do not have a clear answer for. And it's part of the reason why I want to build this community so that we can have a discussion. Maybe you know a lot that I don't. Maybe I know something that you don't. We can give each other ideas and share these theses. And maybe one of them will be that once a year huge trade. See, I'm trying to set my portfolio up to where I only have to have a big trade once a year, maybe twice a year. Then I can make all these other smaller bets. I want to have one very high conviction trade. And I want to only have to be right about 50% of the time. And I want the times that I'm right to more than make up for my losses. And we'll track it as this podcast, as this channel goes forward, and we'll see what happens. So a lot of things were down at the end of last week, and I have done nothing different. There were 2 buys that I made last week that I've been doing for months and months. I bought my monthly allotment of silver. I just take a portion of my income, I put it into silver. I've been doing that for about 17 years. And I take a portion of my income, I've been doing that for less than a year, and put it into Bitcoin. I have the feeling and intuition in my gut that Bitcoin is going to $1 million within the next 5 years, maybe much sooner. So I look at what Michael Saylor is doing in MicroStrategy, and he has been proven more than correct. I have the same type of idea that we just go into it by dollar cost averaging. So you can take whatever you can afford every month. Take $25 a month. Take $50 a month. The beauty of Bitcoin is that you can buy a little piece of it. And of course, I am looking at other coins. I'm looking in the meme coin community. I'm looking a lot at Ethereum. It just came to my knowledge last week that Ethereum is now used heavily in the futures and commodities industries, because those are industries where a lot of shady characters present themselves. Ethereum is used as sort of a surety, as a backup in that industry. So Ethereum is well integrated already within the processes of many commodities, many industries. Bitcoin, of course, the Treasury is going to be setting up a reserve of Bitcoin. They're not going anywhere, and I believe their role is only going to increase. I'm excited to see what happens with that. So I've been buying little bits of that. I bought more shares of Jack in the Box on Friday. And guys, they have a new CFO, and I've read a little bit about this person, and I'm going into doing more research. I told you that my Jack in the Box trade is not a high conviction trade, but it is just a place where I'm keeping my money. I have a feeling that Jack in the Box is going to do well over the medium term, and Jack in the Box is declaring earnings on the 20th. And I'm thinking about buying some options that will expire on the 22nd so that we can take advantage of whatever moves comes in earnings. Of course, I don't know what the earnings are going to be. I have no real thesis, so it'll be a gamble. So I'm going to buy the minimal amount probably of options that I can buy. I may not even do it. I may just buy more shares, and we'll see where the stock goes on Monday, tomorrow. But I am thinking about buying options in Jack in the Box. When and if I do that, I will announce it on this channel, because I'm announcing all of my moves. And we'll see if I win huge or if I lose everything. And it could happen. Again, I'm not going to be putting a substantial amount of money on it. And I think this is one of the main elements of a good trader. This is one of the main elements of any investment strategy. You buy a number of shares in a stock, or let's just say a proportionality of risk that aligns with your conviction. If you have a thesis where you have high conviction and you have a stock, you go ahead and buy a lot of options in that, so you have high conviction. If you have very low conviction, you can still bet on it. Just do it in a low to moderate manner. Of course, this is not investment advice. I'm not an investment advisor, nor am I a predictor. As we said, prediction is not possible, but we just act, guys. The reason we talk about the future is to direct our actions, and to some extent, as we said earlier, you create the future by betting on it. So next week, we're going to be looking at Jack in the Box. So the appointment of Robert F. Kennedy, I made a video a few days ago on this, the appointment of Robert F. Kennedy by Trump as the possible head of Health and Human Services, Secretary of Health and Human Services, sent pharma stocks into a tailspin. I was checking a lot of them, Pfizer, Moderna, Eli Lilly. A lot of these stocks are down. And guys, he's not anti-vax. He is pro-exposing all of the information on the vaccines. He wants to make them safer. And most importantly, I think, he wants to take away the liability protections on vaccines that were bestowed upon them in the 80s by, I think it was called the Childhood Vaccine Act. Very ironic name. And corporations may not like this, so we have to watch what's going to happen. Also, the VP candidate for RFK, Nicole Shanahan, is talking about going after big food. And this, we're corporatizing all of our farms. And this has led to mass-produced food that is very low quality. And if we're the best country in the world, Shanahan asked, indeed I asked, why are there always these outbreaks of E. coli and bacteria? What Shanahan and RFK are going to attempt to do is regulate the food industry and take away some of the corruption, and this will provide an entree for smaller farmers. So, I don't have any particulars right now, but what do you think are going to be some good ways to invest in this? How can we bet on Make America Healthy Again and make some money? Maybe this is not a massive geopolitical trade, but it's something to think about. Should we bet on commodities? Because maybe food prices in the beginning go up and that takes commodities up with it. Should we buy smaller farm stocks? What are smaller farm stocks? I'm still looking into that, and over the next few weeks I'll tell you what my plays are on that. But I want to position myself, first of all, to be able to short at least Pfizer and Moderna before the hearing to swear in Robert F. Kennedy, and second of all, to make some bets on where we think the economic situation is going to go due to some of his policies. I think we can make some money there, so let's keep our eyes on that. Another thing, I've been reading about some of the picks of the Trump administration. Some of them I love, some of them I don't like very much. But of course, he's fingered Tulsi Gabbard as the head of intelligence agencies. Of course, he's fingered Gates as the Attorney General. He might shake things up. What might be some bets coming from that? I encourage all of you who are watching this podcast, and I'm about to watch, as soon as I wrap up this podcast, I'm about to watch a PBS segment on all of Trump's known picks so far. I'm going to research all of them, see what they say, and see if we can't find some bets in there. This is the fun of geopolitical investing, where we can look at people in political positions. We can try to project and tabletop exercise, even use ChatGPT, because we could go to ChatGPT and say, ChatGPT, and make it a person. Like, you are now a geopolitical analyst. ChatGPT, what do you think the economic and investing consequences will come from, Matt Gates saying such and such and such and such? Do that. We can run those tabletop exercises. Come to the comments. Let me know what you think. And then we can try to figure out what we could invest in as a geopolitical investment due to those picks. I am still researching that. Have no clear theses now, but I will tell you about that later on. Another random idea that came to me, because my father's been working in telecom for years, and I just remembered on talking to him that, the telecom industry is still using a lot of the same old switches from 30 and 40 years ago. And there's a very specialized knowledge in telecom that they still hire older individuals. They hire a lot of boomers. They hire a lot of people above the median working age, because they're the only ones who still know how to work with these older analog systems that are still being used in telecom. What would be a good bet on telecom? How can we profit and take advantage of the dynamic there? I'm looking into that. Another random thesis perhaps surfacing is Gladiator 2, guys. I saw King Charles of England attend the premiere of Gladiator 2. It has not been released yet. It looks to me like a good movie. There are very few good movies that are released. This looks like a good classic movie. Could it take off at the box office? I haven't researched it deeply yet. I want to see how it's doing in England, and I want to see how it could potentially do in the United States. How can we bet on that? Could we make some money from Gladiator 2? Stay tuned for those research results coming up here in the next few days as well. Pets, guys. Americans love pets, and people throughout the world do. I mean, we have pets here in my house. How can we invest in pets? Are there any trends that you see coming in the whole market for pets? Whether that's people walking your dogs, whether that's pet food. I want to research that whole industry, whether it's selling and breeding pets, dogs and cats and other pets. I want to research that whole industry because I've seen more and more people, especially young people, have dogs. Again, I'm giving you a window into my ways of surfacing ideas, into my ways of brainstorming. And in fact, I use these videos mostly for me to brainstorm and surface ideas. If you have any ideas about investing in pets, please do let me know about that, and we can have a discussion on that. Again, as a community, we can help each other at least surface ideas. Then the research, we could also do research and put portions of that research up so that everyone in the community here at the Geopolitical Investing Cafe can benefit from that. One more thing, and this really ties into the geopolitical investment tool, and I can't believe it had slipped my mind for a few months. Javier Milei, of course, has been president of Argentina for almost a year. He came here to Florida to visit Trump day before yesterday and speak at a CPAC event at his Mar-a-Lago hotel. How can we invest in Argentina? Because Argentina is following the libertarian model, is following the free market model. Many people are complaining because the first 2 years of this model, guys, things get worse, not better, because they're cutting a lot of public sector jobs, a lot of aid from the government, a lot of subsidies are going away, and it's sad because people are suffering. It takes about 2 years for that to stabilize. In the next year or two, we're going to start seeing Argentina blow up and take off economically. How can we invest in that? What are some companies maybe in the United States that we can invest in that are going to be doing business in Argentina? Another thing is that Elon Musk and his Doge, this Department of Government Efficiency they're setting up, is going to be working with Javier Milei very closely. So whatever happens in Argentina, that might be what's going to happen here. Let's keep our eyes on that. Let's position ourselves geopolitically to benefit from whatever happens there. These are all things I'm going to be researching, going all in the next few weeks. Keep up with the next podcasts to hear about at least my opinions, my ideas on how we can position ourselves to make money from all of these. Finally, my thesis is crystallizing around Iran, North Korea, and Cuba. You see, these three countries have been pariahs for in the case of North Korea for a long time, but at least in the case of Iran, 40, 50 years, and the case of Cuba, more than 50 years, 60 years probably. At some point, they're going to have to open up, guys. Governments, first of all, cannot continue to repress information that's coming in, whether on VPNs or whether through the undercover black market, like in North Korea, where people are smuggling in DVDs and things like this. It's happening, and those governments are not going to be able to hold on to absolute power forever. Also, I see in Trump a huge opportunity to actually open up to these countries. Of course, he's putting some people into positions in his cabinet, like this pick for Secretary of Defense, who seem like warmongers. That may very well be the case. That may very well be a strategy of Trump's to scare other countries into coming to the table. He said this about John Bolton. He said whenever John Bolton walked in the room, Trump said, I didn't really like him, but these other countries felt scared because John Bolton was a warmonger. Therefore, they were more apt to talk to me. Maybe this is what he's doing. I hope it's what he's doing. It's what I feel in my gut. It's what he's doing. And I think we have the opportunity in the Trump administration to start having these countries negotiate and open up. What's going to happen when they open up? I read articles years ago when Obama made the nuclear treaty with Iran that Iran was going to be like the opening of the Soviet Union. There's going to be a lot of money to be made. If that happens, guys, with Iran, North Korea, or Cuba, or some combination of some of those countries, you're going to see massive opportunities. What are the opportunities going to be? How can we profit from those opportunities? Again, I've been looking into companies like Halliburton, even foreign companies like Siemens, technological companies. They're going to have their infrastructures built. And it's going to have to be foreign companies coming in. what do we think are going to be the main winners of that, and how can we get in there and capitalize on that? Again, I'm going to be doing the research. I'm going to be showing you what I think. One more issue that I had forgotten to mention with the RFK thing was Ozempic and these GLP-1s, these insulins that people are now using to lose weight. Many people are against them. RFK is suspicious of them. How are we going to bet on that? Do we short, guys, the companies that are producing these, like Eli Lilly and Ozempic and all of the companies that are making these products? What are they? And do we short them, and when? Again, these are questions that I am feeling for, and I'm trying to work out in my thesis. So again, another thing I do throughout the week, maybe almost every day, is I look at the biggest losers of the day. And the biggest loser of one of the days of last week was this Oklo, O-K-L-O, which is an advanced nuclear technology company. And let me see how far they were down. I know they were down almost 30% in one day. They're still now down 28.51, and the price as it stands is at $18 a share. You see, they're having great forecasts. It says here, and I'm reading from an article just from some analysts, Oklo highlighted significant financial activities and strategic developments. I'm still going to dig into the 10K and the 10Q and all the other financial statements to see how the company's doing and just look over some of the checklists. I've not done that yet, but looks like they're doing good for the future. The company has made notable strides, including a successful business combination that has strengthened its financial position. Of course, the company's financial performance for the last quarter, showed an increase in operating expenses, mainly due to investments in research and development and general administrative activities. Oklo reported a net loss of $9.96 million for the first 3 months. For the 3 months ended September 30th, 2024, and a net loss of $63.33 million for the 9 months ending September 30th. But they've accumulated a lot of cash reserves. They've just had a loss again in an increase in operating expenses, but the stock went 30% down. I am keeping my eye on it. I'm researching it, and we're going to let you know if I go into that stock. We'll see in the next few weeks where that goes. So Oklo, O-K-L-O, keep an eye on those shares, and we'll talk about it more in my thesis. So again, I don't have any concrete theses this week, but I do have some research topics. We're going to be getting busy with those, and I'm going to be sharing them with you in the future podcasts. Now again, if I buy options in Jack in the Box, of course I will be doing a segment on the 20th, right after Jack in the Box earnings. So we're going to watch the earnings, I'm going to read them, then I'm going to be doing a segment on. I'm going to come back and tell you we were wrong and we lost a bunch of money, but here's a buying opportunity, because I will still hold Jack in the Box. I'm not going to sell it unless it goes to 100 tomorrow the 20th. Or I'll tell you, hey, we were right and I made a bunch of money and I put on this options trade. When I put it on, I will tell you about it. Again, this is not investment advice. This is just for me to have a track record. And again, you can comment below what you think about this. So thank you so much for watching the podcast. I have fun doing it. We do it every week. I try to do it on Sunday. It is late Sunday, but I'm going to post it before Sunday's over. We'll have a more constant schedule for this as the weeks go by. So I hope you have a great week. I hope you're very successful in the next week in researching, surfacing your own ideas, and generating some investment theses as we finish November, as we finish 2024 and go into 2025 again. We're going to have a great year together, and I think we're going to make a lot of money this year. So until very soon, with much love and appreciation, this is Javier Novoa with the Geopolitical Investing Cafe. If you like these podcasts and like these videos, please help me out. Smash the subscribe button below, smash the like button on this video, and we'll continue to put out great content every week, in some cases every day. Until very soon, this is Javier.